You were listening to chartingwealth.com for Tuesday, the 5th of January, 2016. Again, Happy New Year. What happened as the markets took off on the 4th of January? Well, they took off down, did they not? Moving down big time. The first chart we look at is IYY. What is that? Well, that is the Dow Jones U.S. Total Market Index Fund by iShares. It tracks the whole market. The whole market, I looked at intra-market when it was down about 2.5% or so, ended up being down the entire day 2.11% at the end of the day. No, I'm sorry, 1.6% at the end of the day. It was the Qs that was down 2.11. Trying to do this in contacts instead of wearing my glasses, so please forgive me. I'll lean a little closer to the screen. What do we see happening? Well, the big chart actually rolled over on the total market, gosh, back on the 2nd of December. And if you had followed the big chart and gotten in around then, you would have gotten in around 104. 104, something like that. It was down all the way to 100 today. You might say, wait a minute, what are you talking about making money when the market went down? Why would I want to do that? Well, if you become a sophisticated investor, you know that you can actually buy inverse funds. And that means that they go up when the market goes down. In fact, I was doing well today in QID, which I bought a while back, which is a double inverse of the Qs, which is the Qs is the NASDAQ 100. Now, we are not giving trading advice here. We are giving educational advice, getting you to educate yourself, learn about all these things, listen to our videos, study the market, study to show yourself approved. And when you start being able to successfully do what we recommend, which are virtual trades, at some point you can make your own investment decisions. We are not a stock calling service. We are an education company. And if you had done a virtual trade in an inverse fund sometime around the 2nd of December, you would have cleaned up at the point of today, because that big chart has continued to pummel down until around the 14th of December. Then it sort of slid sideways and rolled over big time today. Now, if we go to the intra-market, that is the 4-hour, gives us a breakdown of the market halfway through the day and then through the second half of the day, we can see that the big moves down were in the morning. The market really pummeled down in the morning, recovered a little bit in the afternoon, but still big moves down, crossed over going down actually back at the end of the day on the 31st. That's been confirmed. When we say crossover, we're talking crossed over on the MACD, the moving average convergence divergence indicator, which is the only big indicator we look at. We could look at a million indicators, but guess what? You end up getting confused because you have so many things you're looking at, you can't make a decision at all. It's called analysis paralysis, and we reject that at chartingwealth.com. As General Patton said, l'audace, toujours l'audace. Audacity, audacity, always audacity. In other words, make a decision, commit to it, and move forward. We try to do that intelligently and not stupidly, but at the same time, we're not going to sit here and have 15 different indicators that tell us every which way from Sunday so we do nothing or we miss the move. Now, when we go, so we're in a confirmed down move on the big chart, we already were, and of course our small chart has crossed over, confirmed down moves right now on the charts. Remember, when the small chart moves in the direction of the big chart, that's when you look to do your virtual trade. Now, if you're looking to do that virtual trade now, guess what? You missed it. You need to wait for the chart to roll back up on the small chart and then cross back over going down. You want to know more about how to read a stock chart and how to trade? Go to our website, please. Watch our quick 15-minute video, how to read a stock chart. You can get that by simply signing up at chartingwealth.com and asking for it. Well, you don't have to ask for it. You just sign up for our daily news review, and we will be happy to send that to you for free, along with this beautiful layout that we have at freestockcharts.com. Now, let's go on back to our 2-day chart, and let's see what's happening with SPY. It was down 1.4% for the day. It had crossed over on the big chart back around the 2nd of December and has continued to move down until about the 14th of December and then slid sideways. Big down moves today. If we look at what happened intraday on the 4-hour chart, we see pretty much the same kind of moves we saw happen on IYY, the total market, the S&P 500. Lots of down movement in the morning, some recovery in the afternoon. And now let's go back to the 2-day chart and we'll look at the Qs, which was really down. SPY, the Standard & Poor's 500, is down 1.4% for the day. The Qs massively down 1.11%. It was actually at one point, like I said earlier, down like 2.5, 2.6%. Major down moves. It rolled over back around the 30th of November, moving down, and again sort of ran a little bit up toward the end of the year and then rolled back over. We saw that starting to happen on the 2-day candle on the 31st of December, and then of course confirmed on the 4th of January with this big down move. If we look intraday, what do we see? We see again huge down move in the morning, a little bit of recovery in the afternoon, crossover going down. That is where we are. We have confirmed down moves on our big charts and on our small charts. I'll say this again for those of you just learning. You always want to trade in the direction of the big move. The small chart will make that big move first, and that little move ends up over time becoming the big move. Then you have to wait for the small chart, that is the 4-hour chart, to back up. When it backs up and moves back over in the direction of the big move, that is the time for you to get in. Can you always get in? No. Can you always have a rollback? No. But we're not professional traders. That's what's so beautiful about what we do. We don't have to trade all the time like professional traders on Wall Street have to do. We wait for perfect timing. We look at 4 charts here at Charting Wealth. We look at the total market, the IYY. We look at the S&P 500, which represents the Standard & Poor's 500, 500 big companies, a lot of the volume of the market. And we look at the Qs, QQQ, which is what? The NASDAQ 100, the tech stocks. So those are wonderful. We've already looked at those. Now we're going to range back out to our 2-day chart. We're going to look at gold. Sort of a commodity, sort of who knows what gold is these days. But what do we see happening with gold? Well, our 4-hour chart, our 2-day chart shows us gold rolled over going up around the 16th of December. What did it really do? It really sort of petered around on us, mucking around, going up a little bit and down a little bit. This 2-day chart's not what we prefer to look at, but we do have a bottom that we drew in around about $100.60, somewhere around there, where gold appeared to be bouncing off. It had been rolling over low on the prior chart, the prior 2-day chart, and we saw it kick over today. And again, I'm recording this the evening of Monday, the 4th of January, going into the 5th of January, Tuesday. What do we see happen today? Gold shot up 1.41%. When we look intraday at our 4-hour chart, we can see that it did cross over going up. We've not been real happy with our charts as of late on gold. It has just not been portending necessarily good things. However, the nice thing is we do have a clean move over in gold. Hopefully gold is going to redeem itself on our 4-hour chart sometime in the near future. This may be it. We'll continue to watch and see how it goes. We did see something we love to see that we talk about on our How to Read a Stock Chart video. Whenever you see the indicator on the MACD crossover in either direction at exactly the same time that the derivative oscillator crosses over, and those are another indicator that we use, the only 2 we really use. On our charts, the MACD, the moving average convergence divergence, is shown by a blue line that is the MACD and a red line that's the signal line. When that blue line crosses over the red line going up, of course it means that the commodity or the stock price, we hope, is going to be going up in that direction and has been confirmed on our big indicator. We then have narrow rectangular boxes that depict the derivative oscillator's movement up and down flowing in the market. And when it crosses over in the same direction as the MACD at the same time, it crosses over its signal line, its zero line. That typically is something that tells us, hey, pay attention. This is a confirmed move. So we're hopefully going to see gold making some good, strong up moves over the next few days, giving us a reason to trust our 4-hour chart again. We trusted it a lot until about what was this? I think it was around the 16th or so of November. And then it started around the 12th or 16th. Yeah, the 12th of November. Then it started lying to us. And when it didn't go up as it crossed over and told us it was going and sort of slid sideways and went down, we lost faith. Now, the problem with the MACD is when you have a sideways slipping market, the MACD is not helpful. That's what we saw happening with gold at that point. So if we can start getting some real movement in gold like we had before, we can start trusting the MACD again on the 4-hour chart, which had been so good to us. If you look back before that November date, mid-November, that 4-hour chart was as good as gold in portending what was going to happen on gold's prices. But it started slipping sideways, and that's what screwed it up for us. That's when your MACD is not any good. So folks, that's where the markets are. Big markets are down on our indexes, and the short-term charts are down. On gold, charts are up. So we'll continue to watch as the market moves along. Please follow us on Facebook, Twitter, Instagram, YouTube, and we'd love you to go to our site, sign up for our daily newsletter, and you get our weekly review and forecast. Also, what do we charge you here at chartingwealth.com? Nothing. It's all for free. It's all about educating you. Thank you so much for being with us. We'd love to hear from you. Love to know what you need that we're not providing. Let us hear from you at chartingwealth.com.